morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're kicking off our review of earnings season with two of the larger institutions listed on the Trinidad and Tobago Stock Exchange. We're talking, of course, about Republic Financial Holdings Limited as well as Guardian Holdings Limited. Now, both groups would have reported fairly contrasting results for their respective financial periods. Let's take a look at what they would have reported and what investors might expect in the coming months ahead. Turning firstly to RFHL or Republic, the group would have reported for their 9-month fiscal period of 2026 and the June earnings per share figure of $9.39, which was a 2.2% improvement from the $9.19 reported in that prior comparable period of 2025. Now, net interest income was quite an impressive improvement, rather, up 7.3% over the comparable periods. Just over 4.04 billion to 4.34 billion. Again, that's 7.3% increase. Operating income overall up 7.6% from 5.64 billion to 6.07 billion. Operating profits ultimately increasing 9.6% from 2.58 billion to just about 2.83 billion. Net profit before tax, however, did have a more modest increase, up 2.6% from 2.27 odd billion to just about 2.33 billion, with net profit attributable to equity holders ultimately increasing just about 1.6% from 1.50 to 1.52 billion dollars for that 9-month period. Now, when we take a look at operating income trends, we can see in that greenish segment the roughly 7% increase in that, or over 7% increase in that net interest income from that 4.04 to 4.34 billion dollars. Other income also improved just over 8%, in fact, from 1.60 billion to just about 1.7 billion. But as we take a look over a more prolonged period from the 9-month period of 2022 to the 9-month period of 2026, we can see that there has been consistently improving operating income for RFHL over those consecutive periods. Now, when we take a look at profit before tax contribution by geographical segment, some important points to note. Trinidad and Tobago, the largest contributor still for that 9-month period, was up just around 2% from 1.9 billion to just about 1.94 odd billion dollars in that reddish segment. In terms of other major contributors, Guyana was actually up just about 23 odd percent in that pinkish segment, from 331 million in PBT to 407 million. The Eastern Caribbean up 26% from 210 million to 265 odd million, while Cayman Islands fairly significant as well, up just around 10.7 odd percent from 325 to 360 odd million. Overall, fairly positive results and fairly broadly improved operating performances across all geographic segments for RFHL. Now, for investors, of course, over the past couple of months, we've seen some stabilization and modest improvement in the stock price of RFHL. On a longer term trend, we can see that investors would, of course, be hoping that we get back to $140 odd level in terms of the stock price. But there has been somewhat of a decline, and we are seeing, of course, at this point in time, some degree of stabilization in RFHL stock price at around, or consolidating around at 108 to 110 odd level at the current point in time. However, when we take a look at trailing earnings per share trend, we can see again, like revenue or operating income, rather consistent improvement over those past few periods, with trailing earnings per share at this particular point in time at around just under $13.70 per share. Now, what does that mean from a valuation perspective? Well, as we can see, the stock has gotten, on a relative basis, relatively cheaper, falling from a multiple or price earnings multiple of 16.2 times to just about 8 times. So what does this mean in plain terms for investors? Well, for every dollar of earnings generated by the company back in 2022, you would have had to pay 16 times that, whereas right now you're just paying 8 times that dollar of earnings generated to acquire a stock of RFHL. So when we take a look at the banking sector averages, again, a fairly healthy dividend yield for RFHL at around 5.5% compared to that banking sector average of 5.2%, and it is on the lower end in absolute terms to its comparable companies on the sector of around an 8 times price to earnings ratio. So again, at that price, at that last price of 109.59, RFHL is trading at that P ratio of 8 times, below the banking sector average of 10.7 times, pretty much in line with the average dividend yield for the banking sector. So with that higher revenue in mind, modest earnings growth, but continued positive earnings momentum, geographical diversification, as well as relatively attractive dividends. Bourse is maintaining its market overweight rating on RFHL for the time being with a stable outlook. Turning very quickly to GHL, and for their fiscal 6-month period or half year ended 2026 June, the group would have reported an earnings per share from continuing operations of $1.53, which was a 10% decline from the $1.70 reported in that prior comparable period of 2025. Insurance service results were up 10.9% from 425.7 to 471 million. Net income from all activities, however, did decline just around 4% from 961.7 to 923 odd million, driven by some fair value, or a swing rather, in fair value gains to losses over the comparable periods. Operating profits down 9.3%, and ultimately profit attributable to equity holders on a reported basis down 66%. Again, focusing on continuing operations, down just about 10% over the comparable periods. Now, when we take a look at operating profit by segment, some notable changes in the major segments. Life, health, and pension, for example, that operating profit would have declined from 416.5 to 337 odd million, roughly a 19% decline there. That was partially offset by improvement in the property and casualty segment from 174.7 in this oranges color to 187.7 million, which would have represented roughly a 7.4 to 7.5% increase. Now, importantly for GHL shareholders, we can see that book value has consistently increased over the past few consecutive periods and now currently rests at about $29 per share. Compare this to the trading price of GHL, which is just around that $16 mark. And what does that mean for investors? Well, again, from a valuation perspective, relatively cheap when using the price to book multiple, which has come down from 1.5 times in the fiscal 2022 period to 0.6 times in the most recently concluded period, which might represent, from some perspectives, some quite attractive value for investors who would be looking at GHL as a potential addition to their portfolio. So at a price of $16.25, GHL is trading at a price to earnings ratio of 1.5 times, well below the sector average of 11.1 times, and offers investors a quite juicy dividend yield of 6.7% above that sector average of 5%. With those high insurance revenues in mind, relatively attractive valuations, and appealing dividend yield, and acquisition activity, however, keeping an eye on those fair value volatility impacts to earnings, Bourse is maintaining for the time being a market weight rating on GHL with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.